please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to Taking Stock, the show where we take stock of the week gone by on Dalal Street and prepare you for the one that's coming up next. I'm Surabhi Upadhyay, and with me is Prashant Nair. Prashant, hi. I mean, I thought it was a pretty interesting week. We've ended down just about, I think, 0.7% on the Nifty, but all about earnings, right? And I'll tell you the trend that stood out for me as I was looking at, all the numbers and preparing some data for the show. All said and done, it's still financials on top. It's still your housing finance companies, the Kotak Mahindra banks of the world that have delivered. Because otherwise, we've seen slightly patchy earnings as well this week, right?
Oh, yeah. I mean, I think, but as you say, it's all about numbers and the market hasn't really done very much. So why don't we quickly take a look at what happened as far as the week is concerned. We were up for 5 straight weeks. We've been kind of sort of discussing this for 5 weeks, we've been up every week, and this was a down week. So we've broken that winning streak. So we're down about 0.75%. The Nifty, that is. You look at the Bank Nifty, I mean, we ended the week up about 1%, so it was not that bad. But then the Bank Nifty did not go up for 5 weeks in a row, and the Nifty did. The mid-cap and the small-cap indices were also absolutely flat. I mean, the mid-cap index was, I think, down a little, small-cap index was up a little, but essentially flat, about 50, 60 odd points on each of these indices, Friday to Friday. The Nifty, by the way, is up now 7% from the lows that we saw on the 23rd of March. We're about 5% away from lifetime highs. The consensus now, I mean, remember, the global noise also has been relegated to the background. Maybe that is because there is enough to deal with here, which is earnings season, big companies reporting, etc. So all that talk of trade war, maybe it'll come back. Remember, the 12th of May is when the US president has to make a decision whether to remain in the Iran nuclear deal. So I guess oil markets will start their chatter once again ahead of that. And that is all of next week that we have. But broadly speaking, global has been relegated to the background. Local has taken center stage, sort of the front driving seat once again. And one big reason for that, of course, is going to be the Karnataka elections. That was the last graphic. So you got 12th of May, which is essentially the next Saturday, which is polling. And then the Tuesday, the week after, when we have the results. I think, if you ask around, the view out there is that the polling and the opinion polls, etc., they all kind of suggest a hung kind of a situation. BJP, Congress, almost equal. But one has to wonder how much of the other outcome has been priced in, which is the BJP, maybe with the help of JDS, maybe with other parties not coming to power. Is that outcome really in the price? I mean, I'm not so clear about that. And I guess that and some of the other topics we will discuss with Andrew Holland, who's actually with us on the show. He's with Avendus Capital Alternate Strategies. Andrew, thanks very much. Great to have you with us here. Appreciate it. Your sense of the market, and I mean, let's just begin with Karnataka, and come back and circle back to earnings, etc. What is really in the price for Karnataka elections?
Well, I think you kind of pretty much hit the nail on the head. It's that, everything seems to be, market people think everything's priced in, but that doesn't take, away any kind of factors which are both either positive or negative. I think, the way I look at it is whether the margin of loss for the BJP is more than expected. But also, what are markets doing at that time and what global markets are doing as well, because it's a sentiment factor at the end of the day, and then we'll kind of move to the next elections in November and then the general elections thereafter. So I don't think it's going to swing my views one way or the other in terms of the overall kind of economy or the earnings season or anything else. So it's just a lot of noise as we get closer to the time of the results, but I don't think it really matters in the whole scheme of things in terms of the economy or the companies. But obviously, will have a sentiment impact positively or negatively.
Well, okay, Andrew, hello. Always a pleasure talking to you. Then let me drill it right down to the micros, the numbers. We went into this quarter with great expectations. And this week, if I can just be sort of, very clinical about it, we've had a share of disappointments, whether it was Interglobe, whether it was a couple of IT companies, even some FMCG companies where the expectations are so high that those volume or revenue numbers didn't quite add up. What do you think of earnings?
No, I think earnings have been in line with kind of where we were thinking. Our kind of view for this year is that earnings growth should be around 15%. I know consensus is nearer to 25, so I'm pretty kind of okay with what I've seen so far. And of course, within any sector, you're going to have the winners and the losers, and that's what the market's differentiating between now, rather than saying every company will do well. It's waking up to the fact that it's only certain companies that do well, rather than everyone else. So I don't think that's a bad thing either. So the quality shines through. But so far I think so good, and I suppose now we're going into the back end of the reporting season, where obviously things start to deteriorate a little, and that's obviously will keep us. Well, actually, to be fair, it might be that the second half of the earnings season won't be as bad as we're all expecting.
Okay, that will definitely be good news for the market then. The other, facet of trade that stood out this week, Andrew, was this profit-taking in the mid-cap market. Profit-taking, or I don't know, some of it was just deleveraging, some of those positions getting unwound. What do you think of that? Because we did have stocks falling 10, 15, 20% as well.
Yeah, I mean, just generally, not just mid-caps and small caps, but generally, markets in India and globally still, are kind of fairly overvalued, depending on which market, but most of them are kind of overvalued. So it doesn't take very much for, to move share prices down, particularly in the mid-caps, because, if you think about it, given the rich valuations, if no one's there to buy at that point, then there's nowhere for the price to go but down. And I think we've seen some of the risk come back into the mid caps in the past week as well. And you mentioned some of the names, in terms of say where there's been a management change, and these things I think just remind us that there is risk out there, and that you can't take every kind of mid cap as being a place to make money all of the time. And I think what I'm trying to say is that, with valuations as high as they are in some of the mid caps and small caps, is that there's, unless there's a real kind of move in terms of the fundamentals, if anything, at best, if they can just consolidate for a while, that would be good. But I think if you get any further kind of global turn down in markets, then I think this is where you're going to see the real pressure point will be in the mid caps and small caps.
Okay, Andrew, your top ideas to buy, your top ideas to sell. When I say sell, I mean short sell.
So before I do that, I think you've got to think about what's happening globally, and I'm kind of neutral from an India standpoint. But unfortunately, I'm feeling more negative towards a global viewpoint, and there's a number of reasons behind that. One, I think again, we saw the Fed come out with their no action in terms of interest rates, but obviously saying that they will do something, or the expectation is they will do something in June, and that will push up short-term interest rates over the next 1 month. And I think that's causing a little bit more pain than the market's really anticipating, particularly if you take, say, car loans in the US. I mean, car sales fell off a cliff last month, and that's going to put a lot of pressure. And this is an over $1 trillion market in terms of loans, so it's not a small amount. And I think that could come and haunt us a little bit, as well as the credit markets. So I think what we saw in February in terms of a bit of turmoil in the bond market emanating to equity markets could come back again. And then, as you pointed out, there's still the Iran deal to be finalized, and there's China trade talks on. And of course, there's President Trump, who we all know is kind of unpredictable in what he's going to do. So I think, again, markets globally look a little bit overvalued. So I think, when I look down and think about India, then I think two things. One, I think the currency will continue to depreciate, so therefore IT is a place to hide along with FMCG in the short term. Private banks we like, and we've liked for a long time, so that's where I'd probably be more kind of holding on the long side. And on the short side, you know, I've got to think if you know, if interest rates go up in the US, and you know, our yields are going to harden here. So again, the PSU banks, you know, just remain the solitary kind of place where, you know, there's going to be a lot more pressure, and the results will show that too. And I probably would kind of throw in real estate in the short term as well, in terms of problems there, you know, which we've seen with one company already in the last few days. So, you know, those are kind of more global factors which are making me a little bit more cautious about the Indian market in the short term. So I'm looking for places to hide rather than I'm looking for places to see where I'm going to get a lot of growth. I think also on the auto side, we had some great numbers. I mean, you know, all the numbers were great, and including the, you know, the recent month's sales. But, you know, share prices are not really moving higher anymore. So there may be, you know, that kind of run in the auto sector is maybe over, and that's why you're seeing a bit more of a switch towards the private banks and selective IT companies, and FMCG, again, selectively in terms of those who've got good results. So that's where we're kind of positioning ourselves.
So on IT, which is one of your hideout places, Andrew, in the current environment, as you explained, where are you more comfortable, large cap IT or mid cap? Because again, as earnings have you know, told us this week, you can kind of go off the mark because again, stock prices have run up so much and expectations are very high.
I mean, for our fund, we're keeping mainly to large cap because that's where we play. But you know, obviously, we have been selective in who we want to be owning. And we've seen, again, you know, some disappointing results from Wipro and HCL Tech. But, you know, that said, I think, you know, when you need a place to hide, then the whole sector becomes a place to hide. So not as though I'm advocating those two stocks, but I would say that they would probably hold where they are, if I'm correct in saying that, you know, global factors might become a little bit more, you know, kind of dire than they're seeing at the moment.
And thank you very much. Appreciate you joining in with that opinion. Appreciate you coming on, and we'll speak with you soon again. Thanks indeed. We slip into a quick break here on Taking Stock. We will play out some market opinion that we got through the course of the week. So let's do that. When we come back, we have more opinion on the technical side coming up, and some advice on your questions as well. Back in 2.
The earnings season has done extremely well in the first month. We've had a lot more positive takeaways from the results, and except the usual suspects, the corporate lenders, you know, we have seen otherwise a very nice and rising earnings trajectory across various sectors in the economy, with double-digit earnings growth into the next 24 months. So this is where I think fundamentally the market looks good from a medium to long-term perspective. However, you know, some of these macro things we mentioned and the election issues could again move the other way and create some volatility in the next 15 to 30 days, which is something which we can't rule out.
I think you're going to see still better earnings as we go forward over the next 12 months. And that is really what is going to underpin the market, in spite of the fact that a lot of the macros are not so good. I think for the next 3 months, the right sort of range would be between 10,000 and 11,000. And anything beyond that would definitely be an opportunity to book some profits and take some gains. That's not only in the short term. I'm also looking at, you know, maybe a 12-month time period where the elections will start being factored in. And our assessment is that if you have very good election results, that's a BJP majority, the market could go to as much as 13,000 after the elections. But if you have very bad results, that means no majority and no government, the market could go down to 9,000.
Around the 10,600 mark, the Nifty has a lot of support, and till that level is not broken, we are of the view that this move should take the Nifty to lifetime highs. So we are working with a target of about 11,100 to 11,300, and we expect those levels to come by in the next few weeks itself. We are up 700 points in a matter of few weeks, and the price action is still good. So I don't think that one should worry too much about what crude is doing, at least in the current scheme of things.
The global flows are volatile and more so negative for the emerging markets because of the macro news flow that you are having on the trade side, on oil, and all of those things are causing the volatility. And naturally, you also have the quarterly results season underway, so that is also adding to the volatility. But you know, like basically, you know, market is going through a consolidation phase right now. And within that, with weaker foreign flows, the volatility is pretty much to be expected.
You're with us here on Taking Stock. You heard Andrew Holland talk about fundamentals. Let's get a chart view as well. Jay Bala is with us to run us through what he's making of things. Jay is pretty candid with his opinion and views, and sometimes they swing on the dramatic side. Jay, do we have a dramatic view from you in terms of where the market is headed one way or the other?
Not at this point of time, and I'm still holding on to what I said earlier in late March and early April. There's no change in the opinion that we are likely to head to record highs past 11,300 to 11,400 on the Nifty. But this is one important juncture. There are a few things that are in our hands that we can always manage, and that is actually risk control. And as I said, in the middle of the week, the markets are likely to see a shallow correction from 10,800 ballpark, and the markets are actually doing that. And we want this correction to, my opinion is it's coming to an end really soon. But in the event that I'm proved wrong, I don't want it to move in a very fast way on the downside. If it were to move in a faster fashion, then it will put my thesis into question. But the probability of that happening, I think that's quite low. But the reason why I'm talking about this is risk control. You have to be aware of the opposite opinion, and the market doesn't agree with you. You need to be agree with the market and then agree that your opinion is wrong. But the probabilities and the chart structure at this point of time is saying that my view is likely to be correct, and we are very likely to see some sort of catalyst come from the US markets. Before the US markets can take out the lows on the S&P below 2550, I think we are heading somewhere close to 2850 on the S&P. So that is likely to give a boost. And given that we have a softer rupee, I think even that's also likely to give a boost for our markets. But by Monday or Tuesday, I think this leg of the correction should be complete, and we are likely to see the next leg of up move. And that confirmation will come through once the markets can scale past 10,825 on the Nifty.
Okay, Jay, yes, that is a sign of a smart trader, right? Don't get carried away with your own emotions or your own ego. You stick to what the screen is telling you. But you said it should be a shallow correction. What does that mean? I mean, what would be that lower boundary till when your thesis of otherwise expecting higher levels by August hold?
Yeah, that's right. See, we've gone from 9951 to almost 10,800 on the Nifty. And, each day the markets have been, nibbling lower. It's not a big drop of 200 points on the Nifty. That kind of move we don't want to see. That will actually is what negate the move. So when I say shallow correction, the kind of drops we are seeing 0.5%, 0.75% of a drop. That's the kind of drop we want to see, and that is a reiteration that the opinion that we have is right on the market. But anything a deeper cut will put paid to our positive hopes. But even then, even that scenario, it will only delay the the medium-term price objective. It will not reverse the possibility of long-term, medium-term, long-term market scaling past 11,100 highs that it made in January. So this is what we want to see. Price action, is pretty important, and the markets have so far been doing that.
In terms of trading stocks, Jay, what would you sort of say? Tell our viewers are good bets, big bets.
as I said, 4 or 5 weeks back, I'm very bullish on the CNX MNC index, and that still continues to be one of the favorite sectors. Now that IT is cooling off, and it's not actually seen its final highs, but there is still more, a little more to cool off on in that sector. You're going to see some more action come through in the CNX MNC index. In fact, I have 2 picks from within this sector. One is actually Vedanta. It's going to be a beneficiary of a higher crude, which I am bullish on, and also I'm positive on the British pound. So a combination of factors, chart structures, is going to come into play. A lot of macro factors. So I believe it's unlikely to drop below 265, and we are seeing the Australian index come very close to 52-week highs, and that's an indication that even the metals sector, natural resources sector, is doing pretty well, and Vedanta is pretty much into it. So there are various macro factors that's going on into this call, and I believe Vedanta is likely to cross 360 in the short to medium term. And another stock within the CNX MNC space is actually United Spirits. We're seeing Pioneer Distilleries and Som Distilleries at record highs. Now, that is actually going to spill into the big boys, and United Spirits is the big boys within the sector. And from the recent lows, it's actually clocked higher highs and higher lows.
Sure.
And we want to see the stock United Spirits come close to somewhere 3,300 if you're lucky.
Okay.
You have to grab that by both your hands. And
Okay.
we want to see the stock scale past 4,400.
4,400, that's a big target on USL. Bala, before we let you go today, the sector of the week, for all the wrong reasons, has been aviation. We've seen a lot of price damage on stocks. But what do the charts on an Interglobe and Jet Airways now tell you? I mean, is this a longer-term pattern that's changing? I mean, Jet anyway has been underperforming last 2-3 months, but Interglobe's precipitous fall.
Yeah. See, Brent and NYMEX crude, I'm very positive. It's just seen the middle portion of the move, and we still have some more upsides to be done. I think, I was not in your channel sometime in November, December, but I was very positive on crude and said the long-term negatives are likely to play for the aviation sector. That is actually happening. But, the advice at that point of time was not to play that on a short term because there were short-term upsides. So, I believe Jet Airways could drop as low as 400. So, so there is a considerable amount of negatives in the aviation space, and we are not done with the negatives.